Hello and welcome to Fin Business. Today we are in conversation with Trevor Bull, who is the Managing Director and CEO of Aviva Life Insurance. Insurance industry is going through many changes and challenges, and we are going to get some interesting insights from Trevor. Trevor, welcome on the show.
Thank you very much indeed. Thanks for having me.
So finally the FDI was there. The rules were passed 3 years back and the company actually got a lot of capital through FDI. There are many life insurance companies which actually got listed also. So it was, pending for many years, but finally it's been done. What is the benefit for the entire life insurance industry of FDI, of IPOs?
Everything like that you mentioned is positive. Every change like this is positive. Anything which releases the industry, brings more capital into it, allows the insurance industry to expand and reach more people to help. Of course, it's positive. So yes, the FDI change was a good thing. We've been waiting very patiently for it, but it was a good thing. Aviva was one of the companies were the very first to move in there and increase to 49% with diverse, full cooperation and collaboration because they're great partners. But did it bring more capital in? No, it moved capital from one hand, shareholders to another. So it doesn't necessarily mean extra capital. But for us, we were in a position of very significant surplus capital anyway, well over 300% solvency margin. So, but yeah, I think what's made the difference more for the insurance beyond these changes actually is the whole economy and the feel-good factor in India has changed probably in the last 3 to 4 years. The whole energy of the company, the feeling, the big dreams to think I can do something now, I can really achieve something. That energy has also translated into insurance. Insurance industry has certainly benefited significant growth in the last couple of years from a tough time, 2011 through to 2014 for the life industry. So yeah, I think people are beginning to fully understand the value of insurance. Insurers have certainly made significant strides in improving the way we treat our customers, rather than just sell. There's the whole industry, Aviva in particular, but the whole industry has made a real effort to say, no, we must understand the need first. What is actually is their concern? What is it that we can help them solve? And that's a big change. So I think generally it's good, and digital helps. The whole ability of being able to reach people and communicate better with people. Digital itself, I think, has been an extra boost to the.
So I will come specifically on the digital in my next question, but before that I would like to understand, since the company's got a lot of capital, since there are plans to go for an IPO and raise another capital, what is the immediate change that the company has done into the company with the FDI, including your company? What are the changes that you actually adopted?
I think the changes we specifically did, we're not in any shape or form ready or feel we're in a position we want to go to an IPO at this stage. We're absolutely more focused on getting the business growing into a much stronger position before we go IPO. But for us, the difference was stepping back and saying, right, the world is changing, customers are changing. You just look at Flipkart didn't exist 6 years ago.
Yeah, absolutely.
And the way customers are behaving and the way they like to now experience something has changed. Uber's changed it. Today you can just order a seat at a restaurant, get the car and the free glass of wine or the free dessert in one moment on an internet. You don't have to do 3 separate transactions. Insurance companies, I think for us, we said, right, digital, not just pushing digital, but changing the experience and engagement with customers. Rather than last year, once a year, I send you a policy and ask you a year later, please pay your premium. That's my relationship. My relationship changes now. Yes, it changes. I can engage them regularly digitally and really understand them better and have a relationship, not a cold relationship, so once a year.
Great. So I have an interesting question here. When you spoke about the relationship and the engagement that companies are trying to make with the consumers or the customers. For customers or consumers, like sometime back we said about wine and desserts, if you recommend, I can go and buy any wine. But it's not the fact with the financial products. It's very difficult because people take a lot of time. So will actually make big difference when the digital model is been adopted by insurance companies, because the Flipkart and the other examples that you gave, people actually shop over there and it's very easy for them because they find it's necessary. But still in financial products, specifically into insurance and all, people are still not very, aware about the product, and perhaps you will have to struggle a lot. So is it as easy as you say?
Nothing's ever worthwhile as easy. Insurance in the next couple of years is not suddenly going to be exactly like an Amazon or a Flipkart or whatever experience. But digital allows the ability to actually engage a customer more. They still want advice. They still would like to speak to someone before they decide, yes, that fits for me. But all the rest around it can be digitally enhanced for them. We can educate people and help them really understand what they're getting with digital tools, while still having a human being who's a professional, who at the point of decision can still reinforce the advice and the solution is right. So I think with insurance it will be more digitally supported, digitally enabled, rather than 100% end-to-end, no human being involved, pure digital. No, there'll always need to be a human advice element.
So will actually digital help you, because people can buy anything and everything on the internet, but perhaps not financial product?
Will it help us? Yes, yes, and yes.
Okay.
And I'll just give you two very quick examples. Number one, beyond engagement and all the other things I've mentioned. Number one of the complications that we have is the insurance product is a little bit confusing. Financial services is confusing. I mean, people aren't sure, what do I do? What is this, all these words and this policy? So, digital helps us simplify products itself.
Okay.
It helps us ask less questions. An iCard card, I don't have to ask you lots of proof of ID, and I go straight to the iCard card. That's digital. I immediately have to cut down what I ask you, what I need from you. It simplifies things. Digital experience simplifies the whole experience and the product. Secondly, I can make the product more relevant. So if it's health, I can have wellness. If it's a child insurance, I can develop child educational tools and games around the product digitally. So instead of just giving you a product and pushing it, I'm giving you a whole experience of helping you, your journey to improve your child's chance of the best education you give him. Yeah? If you want your mother to have the best when she goes in the hospital because you love her, not the mother-in-law, but the mother, you want to have the best, then it helps with the wellness wrapped around the product. So digital gives me that ability to widen the proposition and simplify the whole experience.
Okay, but the question is, the process has been simplified by digital, no doubt about it. What about the product? Is product still complicated?
No. I'll give you an example. Let's say I have to use the UK in this instance, and I have to use general insurance, even though I'm a life insurer. So the UK, my parent, one of my shareholders, Aviva, they developed a product for insuring your house against fire, theft, flood. Mm-hmm. They don't ask a single question. They don't ask you anything. Mm-hmm. They already know digitally, they know where the flood areas are in the UK. Yeah. They know where the most burglaries or thefts take place by access to the police records of the area. They have all these data points. They don't have to ask one question, and they give it to you. And they give you a little tool which also monitors the water and heating in your house in case something goes wrong before it really becomes a problem. That's digital. How easy is that?
So are you going to adopt that in India?
And a tool to prevent something happening. So yeah, India will develop, like I think the UK and other mature markets are. We're moving away from insurance to pay when something goes wrong,
right,
to have a greater prevention part to insurance. There's still going to be the indemnity if something goes wrong, but can we help prevent it in the first place? Can we help people's lives be less traumatic because the big thing doesn't happen as often?
Has your cost for acquiring customer reduced with digital?
Yes, acquiring is slightly reduced, but not substantially, because again, you still need that person to give advice. That human part is so important. The cost of servicing has certainly reduced because people are doing more themselves and they're very comfortable to do routine transactions fast and easy at their own time and convenience. Instead of having to walk to a branch or phone someone, they can do it any time of the day. They can do it 2 o'clock in the morning if they want, if they can't sleep. Right. So they love the convenience, but when they really need help, they'll always reach out. Okay. So the simple things, they actually love the convenience. So yes, the cost of servicing has gone down more than the cost of acquisition. Because advice is expensive, but it's important.
Okay, so the cost of servicing has gone down. Going ahead, what would be the scenario? Do you think that the cost of servicing will further go down and the cost of acquiring customer will also go down?
Well, both will go down, but that cost doesn't mean simply that you would then say, oh good, I'm more profitable. You would use that saving to invest in other things which expand the proposition and therefore what you can really offer a customer. And of course, in making your products more competitive. So yes, costs will have to go down. They should do, because they're going around. If you don't get your costs down, you're not giving the best value every time. You've got to keep making sure you give good balance of value and low, affordable prices.
Quick point, what is Aviva Life Insurance goal going ahead? If you put the target of 2 to 3 years, what is your strategy? What kind of growth do you see? What are the changes do you want to make into your company? What kind of leadership you want to develop in your company?
I think in Aviva India, our aspiration would be, we want to be the best in child, health, and SME spaces. If anybody's thinking about what should I do for my child, they'll think of Aviva. Or an SME thinking, how do I protect my business, my family, my employees, they'll think of Aviva, and health people will think of Aviva as well. And alongside that, beyond then that giving us greater growth than we're already achieving, we're already 63% growth this fiscal year, we're the third fastest growing life insurer here. But beyond growth, I would want us to make sure we're at the top of the league for customer outcomes. So our persistency is the best in the industry. We're now in the top quartile, so that's good, but we're number 4, I want to be number 1. But our claims settlement ratio is the highest in the industry, that therefore we reinforce that when it really does happen, we're there. That our complaints is the lowest ratio. Our complaints ratio, the number of complaints has really plummeted in the last few years. It's a superb indictment to our team, but there's still improvement, still room for improvement. So I want to be the best in 3 particular areas and the best on customer outcomes.
And how much investment are you going to infuse into the company? How much capital? What is the strategy?
The growth at the moment is we've got more than enough surplus capital to fund the growth of 63%. And we went to 100% growth, which with the new deals we've just agreed to sign up, which is Bank of Maharashtra, which we're delighted and honoured to partner with them. It's a wonderful opportunity together to help their customers. And Vodafone, a new digital partnership there, with great opportunity for telecom and insurance to work together. They will add to our growth rate, but not to the detriment of customer outcomes.
Telecom companies, so many telecom companies have got this payment bank license as well. As a distribution partner, it would be a good strategy for you to go?
I think going forward, digital does bring partnerships more than before. That where someone is good at something and it's relevant to your business and vice versa, there should be partnerships. So that's not just telecom. There's lots of other business, health providers, wellness providers. There's relevance with insurance if it's partnered. So I can see lots of alliances and partnerships of different flavors going forward if they support child, health, SME.
It was great talking to you and wonderful insights from you, Trevor. Thank you so much for talking to the business. Thank you so much. And thank you so much for watching.